Hey yo, what's up? My name is Benjamin, owner of Forex Hermes. Hope you're having a great day. So today's video is going to be a more technical video. Today we're going to be talking about something rather technical, right? Now, I don't know if I'm going to be able to illustrate this, but I will try and, how can I say, explain this to my best ability. All right. So unfortunately, I'm not like the greatest graphic designer out there, but I can explain this. So today we're going to be talking about how to identify trend fatigue, right? How to identify when the trend is getting, weaker and weaker. All right. So let's talk about a uptrend, because I like the bullish trend more than the bearish trend for some reason. I'm just kidding. There's no really reason that I chose the uptrend. But anyways, so an uptrend, right? How is the uptrend classified? It's higher highs and higher lows, right? So the way to see if a trend is, losing its steam, losing its strength, is by checking the distance between the higher lows. Right? If the distance between the higher lows are becoming smaller and smaller, that means that your trend is losing strength. All right. Now, why is this important? Why would we need to know when the trend is losing strength? All right. So with me, I'm an Ichimoku trader. I'm a trend trader. And I ride trends until they are done. Okay, so this is very important for you if you are a trend trader, not necessarily just a Ichimoku trader, but just a trend trader in general. Right now, being a trend trader, you need to know when the market is about to change direction, because once the period in between becomes extremely small, there's a very big chance that the reversal might happen. It might not happen. It might happen. Market isn't very stable, especially lately with the, virus lately. But just make sure that you see the period between, the higher highs. Not the higher highs, but the higher lows. The higher highs don't really matter that much, but I'm talking about higher lows. Right, the retests. If you plot a trend line, you'll see that they will be touching closer and closer and closer. If you're using a 4-hour chart, this is amazing, because then you don't have to check it every single time. You normally check it every, few days, to be honest. That's why I love the 4-hour, chart. And that's why I trade mostly on the 4-hour. I don't go above to the daily, maybe to go and draw like support and resistance. But other than that, I don't trade higher. I don't trade lower. I just look at the 4-hour and enter on smaller time frames. So that's why you can look at the higher lows, right? So you know what, this is a bit too short for a video. Let me talk about the downtrend as well, just to cover that as well. So a downtrend is classified as, a trend, obviously, with lower lows and lower highs. Now you would look at the lower highs and their distance. As soon as they get smaller, you know that the trend is losing strength. Now, how would you take advantage of this? How would you take advantage of the, constriction of, the period between the lower highs or the higher lows? Pretty much what you can do is plot your trend line. All right, and pretty much see, how it's pretty much getting smaller and smaller and smaller. And if you are a person that likes to get in on breakouts, wait for it to break out to the other side. But obviously you need confluence, you need more confirmations, and you don't just get in. All right, if you're a breakout trader, you know what you're doing. Okay, because this is a trend line breakout. They act different from just normal horizontal lines, okay? But it's definitely a great opportunity to get in, because obviously it starts out with a lot of momentum, and then it generally just, kind of dies out and dies out. But yeah, that's definitely a way you can look at it, a definite way of trading, the size or the strength of the trend, and as I said, if you are a trend trader, you can scale in with those retouches. So if you do see rejections at, the trend line support or trend line resistance, then you can obviously just scale in because your trade's already doing good, so why not add on to that? All right, so I guess that's pretty much it for today's video. I just wanted to get this out of the way because a lot of people don't know how to gauge trend strength without looking at the Ichimoku and stuff like that, or looking at specific indicators. This is a great way to look at it just with your naked eye, and the more you practice looking for it, the easier you'll be able to spot it in everyday scenarios. And that's pretty much it about like the whole forex industry. The more you can study it, the more you'll see it, and the more it'll just be natural to you to be like, okay, the trend is like starting to slow down, or the trend is starting to speed up, or something like that. So if the trend is starting to strengthen, obviously get in again. There's really it's not like harming your account to get in if your trend or if your trade is doing good. That's the thing that a lot of people don't understand, and it's very easy to scale in. I might even do a video about that, because a lot of people don't know the power of scaling in, especially on a small account. Obviously not like a crazy small account, but if you're just starting out, if you invested a good amount of money, then you can, scale in. But yeah, I think that's it for the video. That's a very nice short video, straight to the point. Hope you enjoyed today's video. If you want to join my Discord community where I drop analysis, tips, and we discuss things sometimes, link in the description, join that group, and yeah, we might have text discussions or even like video discussions or voice discussions. I pretty much just feel specific ways and then I decide, but normally when I open the discussion channel, it's for when I am online, so I can keep an eye on what's happening in the group. But yeah, that's all from me, Benjamin from Forex Armies, and yeah, enjoy your day.